Did you know that 90% traders lose money because they do not understand liquidity? Today, I will reveal how banks and institutions manipulate liquidity in order to get profit and how you can take advantage of this knowledge. Stick around because we are covering liquidity sweeps and how I catch big moves from it. In everyday life, liquidity means cash or anything that you can instantly convert into cash. Your iPhone in your pocket, if you can sell it fast, that is a liquid asset. Your car, if you can cash it out, that is a liquid asset. For banks and governments, their product is currency. And just like mobile phone and car manufacturing companies need to sell their product, these currency factories need their product moving. This is where you come in. Every time you are placing an order, you are adding liquidity into the market. Whether it be your buy order, sell order, market order, limit order, stop loss, you are liquidity. And when price hits cluster of these orders, boom, liquidation happens. This is why market really moves, not because of some news or some charting pattern. Whenever they have enough orders in order to go into one direction, they start to move the market. So principally institutions are hunting these liquidity pools in order to drive the price to their preferred levels. Remember this, in forex, we are the liquidity. Now let me explain you on charts so you can understand it better. So let us first discuss trend liquidity. So we all know trend is our friend. Now retail's most traded strategy is trend line strategy. These are the 1 and 2 tabs out of which the retail traders make this line out. Then at the third tab, they are very much confirmed that it is going up. So they wait for the mitigation areas and near the fourth touch. But what happens normally is after the fourth touch or just before the fourth touch, it goes up, mitigates something, and it just starts to fall down. So what is happening here in terms of liquidity? Whenever market is breaking a new high, breakout traders are entering. Then market is making another new high. Another set of breakout traders got enter. So these breakout traders have their stop losses here and here. And the big players need these stop losses. So what they do is, once they have taken these orders, these are buy orders. After taking these buy orders, they will come back once more and they will start to indulge more buyers. That trend line is working. But in reality, they will come up a little bit, mitigate some order block in this area, and then rapidly they will start to fall down. So in this process, what they have done, they have taken all the breakout traders, they have indulged all the reversal traders and all of their stop losses. Let me show you a real chart example for this type of liquidity grabbing. Okay, I will explain this concept on the chart of a trade idea which I posted yesterday. So the trend started, then they made low, then the third touch. That's it. So let me explain it. A lot of sellers entered here, then a lot of breakout sellers enter here. This is the final set of sellers which entered in this trade. These are breakout traders. Now reversal traders, on this particular location a lot of reversal traders got entered and their stop losses are here on a structure point. So what is happening here is they induced breakout traders, then they induced reversal traders, and they mitigate some order block on the left hand side. If you will see, it is a 15-minute order block, and then it started to go up, taking out their sell stops. Somebody must have placed some sell stops here and ultimately taking out these sell stops. See this example? These are not random spikes. They are precise liquidity rates, and the pattern always repeats. Creating liquidity, then grabbing that liquidity, and then the real move starts. Notice after the sweep, we get sustained movement. That is because big players now have filled their orders at our expense. If you found this valuable, then hit that like button so that other traders get to know this. Comment liquidity below if you want part 2 on advanced order flow techniques. Subscribe for weekly trading breakdowns.